A foreign company rescues a failing port, invests over $1 billion, finally turns a profit. And the government's response? We're taking it back. This isn't just about one port. This is about the new rules of global power. And honestly, what happens next could change everything. Here's the setup. A Chinese company pays hundreds of millions for a lease on an Australian port. Nobody blinks. For years, silence. Then the port starts making real money, and suddenly, everyone in the capital wants it back. So what changed between then and now? And if Australia actually tears up this deal, what happens next? Let's go back to where this all started. 2015. A small regional government up in Australia's far north is drowning in debt. The Northern Territory. Think of it this way. Bigger than France and Germany combined, but with barely 300,000 people living there. They've got a port, Darwin Port, supposed to be this grand gateway to Asia. Except it's hemorrhaging cash, outdated facilities, pathetic shipping volumes, no investors interested. So they do what any cash-strapped government does when they're desperate. They put it up for auction. And here's what nobody saw coming. Over 60 companies from around the world throw their hats in the ring. The winner? A Chinese private company called Landbridge Group. And the price they offer? So high it stuns even the officials running the sale. 99 years. That's the lease term. Federal authorities in Canberra sign off. National security agencies review it. No red flags, no objections. Deal closed. And here's the crazy part. It barely makes the news. Nobody cares. Because in 2015, China is Australia's biggest trading partner. Chinese money is flowing into Australian farms, mines, and energy projects. This looks like just another routine business transaction. Fast forward to today. Landbridge has poured over $1 billion Australian dollars into that port. New cargo terminals, deeper shipping channels, modern automation systems, cold storage facilities. And in the 2025 fiscal year, for the first time ever, Darwin Port turns a profit. You'd think that's cause for celebration, right? Wrong. The Australian government is now openly talking about taking it back. And Beijing, they're furious. But here's the question nobody's answering. Why now? What changed? To understand that, you need to understand what Darwin Port actually was back in 2015. It was a problem. A money pit. The Northern Territory government was in serious financial trouble. This is a vast, remote territory that's always depended heavily on federal funding and mining revenues. By the mid-2010s, those revenues were falling short, and Darwin Port was sitting right at the center of this budget crisis. The infrastructure was ancient. Shipping traffic was weak. Every year it operated, it cost the government money they simply didn't have. So privatization seemed like the obvious solution. Open it to international bidding, attract global capital, and let private investment fix what public money couldn't. The response shocked everyone involved. More than 60 firms entered the bidding. Major infrastructure funds, global logistics companies, sovereign wealth operations. They all saw something the local government hadn't fully appreciated: geography. Darwin sits at the very top of Australia. It's actually closer to Jakarta and Singapore than it is to Sydney or Melbourne. It straddles some of the busiest shipping lanes on Earth, the routes connecting the Indian Ocean to the Pacific. For any company serious about logistics in the Indo-Pacific, Darwin wasn't just attractive, it was strategic gold. Landbridge won with a bid that exceeded analyst projections. The deal went through every federal review. Security agencies were briefed. No concerns raised. Cabinet approved it, and it went through without even a whisper in the national media. Think about that for a second. A century-long lease on major port infrastructure handed to a foreign company, and it's barely a headline. Why? Because at that moment in time, nobody saw it as anything except normal business. But then, everything changed. For the first few years after the deal, Landbridge worked quietly. Major ports need massive investment, and that takes time. New berths were constructed. Dredging operations deepened channels for larger vessels. Cargo handling got automated. Cold storage was added for agricultural exports. Local jobs were created. The community around the port started feeling optimistic for the first time in years. According to reports in Australian media, Landbridge's total investment topped $1 billion over that decade. That's enormous money for a facility that had been written off as commercially hopeless just years before. And the results showed up. Freight volumes climbed. New shipping routes opened. Northern Territory cattle producers found new export pathways. Mining companies got better logistics options. And by fiscal 2025, the transformation was complete. Darwin Port recorded its first full-year profit. A Chinese company had rescued a failing Australian asset, invested heavily, weathered years of losses, and built it into a viable business. Under normal circumstances, that's called a success story. But by 2025, nothing about the world looked normal anymore. Between 2015 and now, almost everything shifted. Australia went through one of its most turbulent periods ever with China. The breaking point came when Canberra called for an independent investigation into COVID-19's origins. Beijing's response was swift and honestly pretty brutal. Targeted trade restrictions, tariffs, informal bans on Australian barley, wine, coal, timber, lobster, and beef. The economic pressure was massive and, well, very deliberate. A message sent through trade channels. Those tensions eventually cooled after a government change and sustained diplomacy through 2023 and 2024. But the experience left scars. It exposed just how vulnerable Australia was to economic pressure from its largest customer. And it, accelerated a fundamental rethink about strategic dependencies. At the same time, the security environment in the Indo-Pacific was intensifying. China's military reach expanded substantially. Its assertiveness in the South China Sea grew. The relationship between Beijing and Washington hardened into what many now call structured rivalry. Australia had to respond. Defense spending climbed. The AUKUS partnership, announced in 2021, committed Australia to nuclear-powered submarines. A massive shift in the Australia-US alliance. US Marine rotations to the Northern Territory became permanent fixtures. Tyndall Air Base, not far from Darwin, got upgraded for advanced American aircraft. Darwin's military significance exploded, and suddenly the port looked completely different. Not because anything at the port changed, but because the neighborhood around it transformed entirely. Darwin Port still operates as a civilian facility. Containers, bulk cargo, livestock, no military functions whatsoever. But its proximity to expanding defense infrastructure, combined with the deterioration in Australia-China relations, made the optics impossible to ignore. A Chinese company holding a 99-year lease just kilometers from a U.S. Marine base? Politically, that became radioactive, and in geopolitics, perception matters as much as reality. The 2025 federal election brought everything to a head. Darwin Port had been simmering in political debates for years. A 2021 review examined the lease. A 2023 security assessment looked at it again. Neither found evidence of breaches or violations, but neither killed the political unease either. By campaign season, sovereignty over critical infrastructure became a major wedge issue. Politicians from both major parties competed to sound toughest on foreign control. The port was the perfect symbol. After winning, Prime Minister Anthony Albanese made his position crystal clear. During a Darwin visit in late January 2026, he publicly stated his government was seriously considering reacquiring the port. No ambiguity. He framed it as national interest. The argument infrastructure this important shouldn't be under foreign ownership, regardless of whether the operator did anything wrong. And that last part is crucial. The government isn't alleging fraud. They're not claiming Landbridge breached the lease. They're not presenting intelligence showing the port was used for espionage or interference. The case is essentially this: the asset matters, and honestly, we want it back. Legally, that's shaky ground. Contracts create obligations. When governments sign deals with private investors, those agreements carry enforceable rights. Tearing up a lease without cause or fair compensation opens the door to arbitration, massive damages, and long-term reputation damage in global investment markets. But politically, the argument resonates strongly. Australian polls consistently show majority support for bringing strategic infrastructure back under national control. The image of a port so close to military bases, operating under a near-century lease to a Chinese company, makes many Australians deeply uncomfortable. That discomfort is legitimate. It deserves recognition. But here's the uncomfortable truth that nobody wants to say out loud. When the port was failing, when it was draining public money, when no Australian investor would touch it, nobody called it a national security priority. It was called a burden. A liability. The moment it turned profitable, suddenly it became a strategic asset. Critics across the political spectrum, including prominent economists, have pointed to that timing with frustration. It raises a question Canberra doesn't want to answer. If Landbridge had kept losing money, would anyone be pushing to reclaim it? Beijing's response has been measured but unmistakable. China's ambassador to Australia didn't pull punches. He warned publicly that if the lease gets terminated unilaterally, China will take steps to protect its company's legitimate rights. The language was diplomatic. The message was not. This isn't a routine commercial dispute. This is political, and Beijing will treat it accordingly. China's entire argument centers on one principle: the sanctity of contracts. The lease was awarded through an open, transparent process. Australian federal authorities approved it. Security agencies were consulted. No objections were raised. Landbridge invested $1 billion based on that agreement. To cancel it now, not because the operator broke rules, but because political circumstances changed, sets a precedent Beijing considers extremely dangerous. And here's where this gets much bigger than Darwin. Chinese companies have invested massively in infrastructure worldwide. Ports in Greece, Sri Lanka, Pakistan, Djibouti. Mining across Africa and South America. Energy networks in Central Asia. Telecommunications on multiple continents. If governments can just tear up long-term deals once those investments prove successful, the entire risk model for Chinese capital changes. Either Chinese firms stop investing in assets that might be seized later, or they only invest in markets with minimal political risk, which increasingly means authoritarian regimes over democracies. Neither outcome serves the goal of open, rules-based global trade. Beijing is sending a message, not just to Canberra, but to every government hosting Chinese infrastructure contracts matter. When they stop mattering, there will be consequences. Now here's the dimension that, honestly, gets lost in all the political noise. Australia's profound economic exposure to China. China has been Australia's largest trading partner for over a decade. And, well, the numbers aren't close. We're talking iron ore, liquefied natural gas, coal, agriculture, education services, the list goes on. China absorbs a massive share of Australian export revenue. Iron ore alone generates tens of billions annually, with the overwhelming majority heading straight to Chinese steel mills. And despite years of talk about diversification, no alternative market has emerged that can handle even a fraction of that volume. The people managing economic policy in Canberra, they understand this better than anyone. Behind all the public rhetoric about sovereignty, there are serious, nervous conversations happening in Treasury and Foreign Affairs. State government leaders know exactly how much their budgets depend on Chinese demand. A dramatic move on Darwin Port could trigger responses far beyond just diplomatic cooling. China doesn't need military escalation or formal sanctions to hurt Australia economically. It has a far more subtle and honestly effective toolkit. We're talking customs delays, increased inspection requirements, quiet guidance to state enterprises to source elsewhere, strategic procurement shifts to Brazil or Africa, targeted anti-dumping investigations, and even WTO disputes. None of these are dramatic. None involve open confrontation, but collectively, they're devastating. Australia lived through a version of this between 2020 and 2023. Beijing's trade restrictions cost Australian exporters billions. Barley, wine, coal, lobster, timber, all disrupted for years. Some sectors never recovered. The prospect of deliberately triggering that again through government action is not something serious policymakers take lightly. Yet the political pressure is real. Alliance expectations from Washington are real. Public sentiment is real. The national security debate is real. Australia is caught between two gravitational forces, its economic lifeline and its security anchor. Darwin Port is where those forces collide head-on. To grasp what's truly at stake, let's zoom out for a moment. The Indo-Pacific has become the defining arena of 21st century great power competition. The United States and China are locked in structured, long-term rivalry across trade, technology, military posture, and influence. Australia sits right in the middle. AUKUS, the security pact between Australia, the United Kingdom, and the United States, represents the biggest shift in Australian strategy since the Cold War. Nuclear submarines aren't just a defense purchase, they're a declaration of alignment. A signal to the region and the world about which side Australia has chosen. That choice brings benefits. Deep intelligence sharing, cutting-edge military technology, the backing of the world's most powerful alliance. But it also brings costs. Financial costs, yes. But also the complexity of managing regional relationships, especially with China. Darwin is absolutely central to this picture. Its location makes it a critical hub for United States military operations across the Pacific. We're talking about marine rotations, enhanced air capabilities, and proximity to vital sea lanes. Darwin's strategic profile has really skyrocketed since 2015. The port sits right in this context. It has no military role, but its location, so close to defense infrastructure, means its ownership has taken on symbolic weight far beyond its commercial function. Whether a Chinese firm running a commercial port actually poses concrete intelligence threats is almost beside the point. The optics have become politically untenable. And in politics, perception drives policy as powerfully as evidence. Inside the Australian government, the debate is far more nuanced than public discourse suggests. There are two camps. The first argues sovereignty comes first. Critical infrastructure should be under Australian or trusted allied control. Period. A foreign company from a country with complicated, sometimes adversarial relations, controlling a major northern port is unacceptable in the current climate. The cost of reacquisition is the price of past mistakes. The second camp argues for pragmatism. It acknowledges security concerns. It accepts tighter scrutiny as warranted. But it urges caution about revoking a legally binding lease. That signals to all foreign investors that Australian commitments are conditional. It undermines legal credibility. It invites economic retaliation when exporters are still recovering from the last trade war. Between these positions, the government must also navigate alliance expectations. Washington has made its views clear through diplomatic channels. The United States sees Chinese control near American military assets as a vulnerability. Not an active threat necessarily, but a complication for operational security. American officials haven't issued ultimatums, but the message is understood. This matters to us. So where does that leave Australia? Stuck, caught between conflicting imperatives. Sovereignty versus contract law. Security versus economic exposure. Alliance solidarity versus commercial pragmatism. There's no clean answer. Every option carries heavy consequences. If Australia moves to terminate the lease, it triggers a chain reaction. Legal arbitration, almost certainly. Landbridge will pursue massive damages. The case could drag for years and cost billions. China will respond economically. Maybe not with overt sanctions, but with the subtle grinding toolkit it used before. Australian exporters will suffer. state budgets will hurt. And globally, Australia's reputation as a stable destination for foreign capital takes a serious hit. If Australia does nothing, the political pressure doesn't disappear. Opposition parties will hammer the government. Public unease will fester. The United States will quietly express disappointment. And every time tensions flare with Beijing, Darwin Port resurfaces as a symbol of vulnerability. There's a third option, rarely discussed publicly but circulating in policy circles: negotiate a buyback. Approach Landbridge, acknowledge the value they've created, and offer compensation reflecting the investment and profit potential. It's expensive, it's politically awkward, but it avoids legal warfare, limits retaliation, and preserves some credibility in global markets. Whether that's viable depends on variables nobody outside negotiating rooms can see. Landbridge's willingness to sell, Beijing's willingness to allow it, the government's ability to secure funding, and political appetite to defend what critics will frame as capitulation. What's crystal clear is this: Darwin Port has become far more than a port. It's a test case for how middle power nations navigate the collision of economic dependence and strategic rivalry. It's a symbol of the dilemmas democracies face, balancing openness to global capital with protection of national interests in an era where those interests are defined in increasingly zero-sum terms. And it's a stark reminder that in the 21st century, almost nothing is purely commercial anymore. Every major infrastructure deal, every significant cross-border investment carries potential to become a geopolitical flashpoint the moment the strategic environment shifts. The rules governing globalization for decades, built on assumptions that economic interdependence would soften political rivalry, are being rewritten in real time. And nobody's entirely sure what the new rules are yet. Darwin Port won't be the last story like this. Across the world, governments are waking up to strategic implications of infrastructure they once viewed as purely economic. And companies, especially Chinese ones, are learning that commercial success doesn't protect against political risk. If anything, success makes them bigger targets. So what happens next? Honestly, nobody knows for certain. The Australian government hasn't made a final decision. Negotiations, if they're happening, are behind closed doors. Public statements remain carefully vague. Beijing is watching, calculating, preparing responses for every scenario. What we do know is the decision Australia makes will echo far beyond Darwin. It signals to other governments how democracies handle tension between sovereignty and contract law. It signals to investors whether long-term commitments in sensitive sectors are worth the risk. And it signals to Beijing whether the rules-based order it claims to support actually applies when those rules become inconvenient. The Darwin Port story isn't really about shipping containers or cargo terminals. It's about something much bigger. It's about trust, power, and the increasingly blurred line between business and geopolitics in a world where every handshake comes with hidden clauses. Australia faces an impossible choice: honor a contract and face political fury, or tear it up and brace for economic consequences. Either way, someone pays the price. The only questions are who, how much, and what precedent it sets for every deal that comes after. Because in this new era we're living in, there are no clean exits, only trade-offs. And the bill? It always comes due.